Hey there, TRASTRA fans. This is our traditional Friday coffee break. I'm Anton, and we probably should talk about the crypto crash a little bit. This whole week, it's kind of been hectic in the markets, and that's to say the very least. I don't want to scare you or anger you more than you already are angered by everything that goes on in the market right now. This is not my goal. This is Friday coffee break. It's Friday morning. Birds are chirping. The weather is really fine where I'm at. So let me just go ahead and throw up this article right here. This one's by CNBC, and it basically says it all. It basically says it all. 40% of Bitcoin investors are now underwater. New data shows. This is why I like CNBC, because it gives you just a quick take in the beginning of everything. Bitcoin is off nearly 55% from its November peak, and 40% of holders are now underwater on their investments, according to new data from Glassnode. In the last month alone, 15.5% of all Bitcoin wallets fell into an unrealized loss as the world's most popular cryptocurrency plunged to the $31,000 level, tracking tech stocks lower. Bitcoin close correlation to the NASDAQ challenges the argument that the cryptocurrency functions as an inflation hedge. There isn't really much to unpack here if you're following markets and if you've been in the space for any amount of time. It is a well-known fact that cryptocurrencies are tracking NASDAQ and some other indices. So whenever tech stocks go down, it basically shows on all tracking data that cryptocurrencies are also following tech stocks, and it's no surprise at all. I mean, we've seen at least major bursts of Bitcoin. If you just take a look at all this, I mean, we've seen one in the late 2020, and then we've seen one just basically similar occurrence had taken place in the same period in 2021. So I am guessing this isn't anything to be afraid of. This may be a seasonal crash. This may be because of the war in Ukraine. So one thing that bothers me about this is the Terra USD sell-off. And this, I think, in my opinion, is much more indicative of what's going on, the systematic behavior of the markets, than the volatility of Bitcoin. We all know that Bitcoin and the rest of cryptocurrencies are highly volatile because they're speculative investment, basically. And whenever market acts like it is today, things are bound to get pretty wild. But one thing that really bothers me is the Terra USD sell-off. A couple of words about Terra. It's basically a what's called an algorithmic stablecoin versus asset-backed stablecoin. Things like USDT or USDC and some other asset-backed stablecoins that claim to be backed by a fiat reserves of some kind or some other assets like commodities or something else. But the reality with asset-backed stable coins at least appears to be relatively stable, hence stable coins. Whereas algorithmic stable coins like Terra USDT, like the newly launched Tron crypto stable coin, these are the products of financial engineering. Basically, these are the lines of code that are created for no particular reason other than help out traders to transfer value in between accounts. And that, I think, first of all, I think in my personal opinion, these stable coins should be legal. I mean, that's as far as private money should go, and probably no further. I mean, cryptocurrencies are as far as private money should go and no further. And algorithmic stable coins, I think this whole concept is really rotten to the core, and I think they should be legal, but they are legal. This is what I'm talking about. We remember the Terra sell-off, the time when Terra basically fell almost 100%, and this was a very, very loud alarming bell when it comes to algorithmic stable coins. They have no bearing on real economy at all. These are just casino chips that are digitally engineered for whatever reason exists for different traders and different protocols to exchange data about their current holdings and their relationship with their traders and fiats and whatever. I mean, so I think this is really rotten, and I personally hate this thing. So here's a pretty great article. I mean, I've had one showing on the Wall Street Journal, but it's paywalled, so I feel funny showing you the article that you're going to have to pay for in order to read. I think that's just as rotten a policy as algorithmic stablecoins, but don't get me started. Anyway, this one here, I'm going to leave you the link to this. It's a very thorough description of what went on with Terra and Terra Luna and the whole thing that happened on May 9th and the whole crash of the Terra stablecoin. And actually, I was gonna remind you that a little while ago, our fearless leader, Roman Potemkin, had penned a marvelous piece on the subject that is aptly titled, How Stable Are Stablecoins and Can They Reinvigorate the Post-Pandemic Market? The post-pandemic remittances market, that is. I love this piece. I really do. It's got a lot of useful links, and it's basically explains the entire situation with the utility of stable coins versus the danger that private money brings into our financial lives and personal lives, for that matter. Because I've been reading some reports that people who actually who's gone down more than 40% on the current Bitcoin crash. These people are pretty desperate. I mean, a lot of during the pandemic and after the pandemic, a lot of government funds went into helping those people. So they couldn't find anything to do with that other than invest in cryptocurrency because of the promise of fast gains. And now these people are basically eating dirt. They have no recourse whatsoever. So this is a very, very vivid illustration on how important it is to educate yourself and not to play with money that you cannot lose. This is just one rule that I think is absolutely solid gold, and it's ironclad, and it has to be tattooed on every forehead of every person that's in the market. But that's beside the point. But anyway, so yeah, this article, it sort of dates back. It's not a brand new piece, but it contains all the necessary information for you to familiarize yourself with the topic of stable coins, so you can evaluate the current situation much better. And actually, one other thing that really bothers me about the current situation is the promise that was made that cryptocurrency, like the promise that was made by people like Michael Saylor and Robert Breedlove and other Bitcoin evangelists, that Bitcoin is probably the most accurate, the most solid hedge against inflation. And this situation basically shows that no, that's not the case at all. I want to play you a fragment of a recent interview by Jamie Dimon of Manhattan Chase. So in this piece, it's a recent interview he gave to a Bloomberg Markets rather. This is not about cryptocurrency. And somewhere in passing, closer to the end of the conversation, the reporter asked Jamie Dimon if cryptocurrency is indeed a hedge against inflation, and his answer is very concise, very swift, and it shows basically that he's got no interest in the asset because for him it's an open and closed book. Give it a listen.
Brought back to the United States.
This will probably be inflationary, right? Is crypto a hedge against inflation?
No.
Right now?
No. I think the higher rates go, the more cost to hold an asset doesn't produce anything. So, but I think national security.
Right. Yeah. So this is basically what he answers. I mean, this is a non-producing asset, crypto. It's just a speculative investment vehicle. It's not real estate. It doesn't produce rent. It doesn't produce any value. There are costs of holding it, and if the rates set up by the central authority, central bank, are going higher, this non-producing asset's just going to track the inflation instead of hedging against it. That's it. Open and closed case. Let's move on. And this is what really bothers me: the broken promise. So again, I urge you to think of crypto not as a speculative investment vehicle. I mean, you guys can play the market if you feel like doing it, if you have money to burn, if you know how to play the system and make your quick capital gains. I mean, I applaud you. Full disclosure, I play the market myself. Every once in a while I lose money. Like I took a beating this time also, not a huge one, but I lost some money. Anyway, that's beside the point. So I urge you not to look at crypto as an instrument for building your budget. That's not what crypto is. Crypto is, the underlying utility of crypto is absolutely amazing. It's a payment tool. It's a value transfer tool. So if you're a freelancer or a digital nomad, if you are getting paid from multiple sources in multiple currencies and you have no ability to set up multiple bank accounts in different countries and in different currencies, I mean, this is the actual utility that crypto brings into your life, and you should take full advantage of it. And this is what TRASTRA is all about. We're not about making we're not about offering you chances to make quick gains with your crypto. We're all about storing your crypto for you, giving you the opportunities to trade it and sell it for fiat, euro in our case, and most importantly, transfer any amount of value via your cryptocurrency or your euros via the SEPA mechanisms, Single European Payment Area, to basically anyone who's willing to accept a euro. So this is a very well-rounded solution for value transfer throughout the European Union and the world at large. And this is basically it. This is what I wanted to talk to you about. Hopefully you got something out of this monologue. Please drop me a comment if you have I'm sure you have an opinion on the situation right now, markets-wise and crypto-wise, and like the content, share it. Please subscribe to the channel if you haven't already. And I will see you Monday when I do my newsreel. Peace.